Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down about 15 basis points and we still have about 1 hour and 30 minutes left in trading. On the 1 hour chart, we do see the 1 hour MACD is turning negative. I do see that happening for quite some time, and for the 4 hour chart, I do see the MACD pointing down as well and may possibly turn negative. On the daily chart, we do see that we are still quite above where support is, but we are creating a synthetic support around these levels due to, I guess, no big real news that changed the trajectory of the market. So if we do encounter some serious news, we may find quick support at the 9-day moving average and the 50-day moving average right there. And that price level is at $286 or $287. And as for support, or resistance I mean, is the all-time high of $294 or $295. So if we were to move on higher, that price movement is about, I would say, 2 or 1.9%. And if we were to hit support, that price movement is about 70 basis points. On to the next module, I'll compare today's current trend with this trend that dated back to December 2nd, 2009 to March 2nd, 2010. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we have several days of uptrend above the middle Bollinger Band, and then it quickly lost steam and touched the bottom Bollinger Band right here, and once more right here as well, and then we see a quick reversal and touch the upper Bollinger Band right here. So we have about 1, 2, 3, 4 points, and right here as well, what we see in the beginning is the uptrend for several days above the middle Bollinger Band, and then after that we made a quick reversal and touched the bottom Bollinger Band, and another touch right here on the bottom Bollinger Band, and then we found an upturn or an uptrend right here touching the upper Bollinger Band. I would say this chart is more forward looking than the current chart, so the forecast may be off a little bit. So what we have here is 1, 2, 3, 4 points, and also 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are similar. The outcome and forecast would also be similar. So let's head to the forecast model. I'll go day by day where SPY or S&P 500 went to back in 2009 to 2010. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. Back then, the S&P 500 was up around 2.8%. It looks like we could see an uptrend continuing on and touch the all-time high again if we do not encounter any negative news and we see some relief in the trade talks with China and a possible meeting with Xi Jinping at the G20 summit this month, or a meeting with Trump and Xi Jinping this month. We could possibly see that as positive and hit all-time high. And here's the line chart that I compared it to. We have the current trend and the 2009 to 2010 chart. And that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.